Good morning. This is Mayor Valensky with Driving Markets, talking about markets while driving. Unless, of course, I'm in a studio, then it's driving markets without driving. But anyhow, I'm now driving, so let's talk about markets. Obviously, anything said in this piece is an opinion only. Just make sure my earpiece is working. It's not financial advice, not investment advice. Let's kick off. So the big news, as far as I'm concerned, hopefully the viewers will enjoy this as well, is that from the beginning of the year, I've been saying that Facebook is a dead duck. Already from January, looking back at all of the media broadcasts from January, February, March, I've been saying sell Facebook. It's a waste of time. It's going down below $100. And guess what? Yesterday it went below $100. It started off the year, last year was worth nearly $1 trillion. In September last year, September 2021, Facebook was worth nearly $1 trillion. It was one of the top 5 companies in the US, and today it doesn't even get into the top 20. It's slightly above some other companies, but it's worth about 270 billion, so it's not 74% of its value. Incredible. So I've been saying it's a load of trash, it's crap, rubbish, dump it, waste of time. And yesterday it dropped more than 30% because its earnings were below analyst expectations. Not only were they below analyst expectations, their future forecast is very, very negative, and therefore overall you've got a big sell. Mark Zuckerberg, I don't like Facebook. I think it's a real lowered itself to a trashy business. It poisons the minds of the young. And also the whole thing I said yesterday about the theft of data and the contamination of data, and the fact that passing on your personal data to everyone else. And then Mark Zuckerberg, in front of a Senate committee, absolutely lied, saying they don't do that, and yet it was discovered through emails that they do that. So again, the company's going down. Ethically, it's got absolute zero standing. Okay, so Facebook is a complete and utter sell, and continue selling it. It's going to fall well below $75 a share. It's going to get, at the moment, it's at its less than, or it's at its 2016 level, and that's Facebook. Let's discuss a couple of others. Apple. Now, hard to believe. I know you're going to say this is absolutely wild. No way, not in a million years. This is going to get all the viewers riled up. No, the big Apple lovers, the iPhone, the iOS, it's not going to happen. Well, I'm telling you it is going to happen, unless, listen carefully, unless Apple starts getting innovative. Apple is not an innovative company. It's not an innovative business. It's simply not innovated anything at all in the last 12 years since the iPhone 4. From then onwards, it's been downhill. I know no one's going to believe me. I know that it's got a lot of supporters. We all know that it's got its big fan base, and it keeps on adapting. But Apple, to me, based on the present criteria, so remember I'm saying to you the present criteria is a sell. It's going to go well below $100 a share. I wouldn't say it's going to go bust, but it's definitely going to go down. The other one, obviously, to watch is Amazon. Amazon also is going to struggle significantly because it's got major issues within its supply-driven delivery business, and demand is down on Amazon's. Amazon's also a sell. I'm making a specific point of that on driving markets. So when we look back, you can say, yeah, you were right, or May, you got it completely and utterly wrong. And I'd say, fair enough, I got it wrong, what can you do? But I do believe that Apple's going down and Amazon's going down. Talking about the rest of the market, yesterday, the US GDP, gross domestic product, came in at the top end of expectations, and that sent the Dow flying. However, the Nasdaq completely trashed on the back of poor numbers from Microsoft, poor numbers from Alphabet, which is Google, and obviously Meta or Facebook, which is the big one that pulled the Nasdaq down. Likely to go down further. As far as the Dow's concerned, as far as the S&P, I expect them to go down further. Just want to say it looks nice for the video. That's it, look pleasant. What they're going to go down. Also, they've topped out, and there is a view in the market that interest rates have maxed out. There'll be an interest rate rise in the States in November, one in December. And the analyst investment managers believe that's it. The bond market believes that's it, because the yields on the 10-year Treasury have also dumped and come all the way down. However, this is only a brief respite in the war on inflation, and the Fed is going to continue raising interest rates well into 2023. So again, I put my name on the line. I reckon interest rates in the States will be around about the 7% level by July 2023. That's that's another big number to make a note of. See if I get that one right. What else have we got? Dollar. Okay, so the dollar was weak yesterday, came off slightly. The pound, well, it wasn't really weak. It was actually, there was slight dollar strength yesterday, but the dollar overall has been weak this week. That's weak, W-E-E-K, not W-E-A-K. It's been weaker this week. The pound's been interesting. That's gone up. Went up yesterday to 116.5. Then during the day came off slightly to 115.5. I think that my pound's going to go against the dollar, which is called cable. It's going to go to about 120, 121 in the near future. I've just got good feelings about the pound. As long as Rishi Sunak and Jeremy Hunt don't do anything stupid and just manage the economy and do a very good, tight public expenditure cut, I'm sure the pound will strengthen. They can balance the books there and bring the UK back to a leading financial #1 centre. Regarding oil went up slightly yesterday. There's a little bit of concern regarding global supply. That pushed up oil. Oil's back at $95 a barrel, probably pushing on to the $100 a barrel. Saudi Arabia came out with an interesting warning on the 15th of October. It said, don't mess with them, effectively, to Joe Biden. When Joe Biden threatened Saudi Arabia and OPEC, don't mess with them, because Saudi Arabia said that everything that they do is financial, and they control the oil, and don't mess with OPEC because they can cause a lot of trouble for the West. So that was an interesting statement made by Saudi Arabia, and that's an old statement that came out on the 15th of October. I only discovered it yesterday, so I thought I'd just mention it today. As far as crypto is concerned, Bitcoin is trying to creep up there to 22,000. It's not going to make it. It's going to come all the way back down. And again, I've still got my target price by year end of 15,000 or lower. Make a note of that, or lower. So markets have topped out. That's more or less it as far as the summary. Going forward, what you're going to have is you're going to have all eyes now in November on the FOMC interest rate decision from the Fed. Yesterday, the ECB raised interest rates by 75 basis points. That's the European Central Bank, and they will continue raising interest rates over the next 3 to 4 months minimum. They're well behind the curve, and nothing's going to save the euro. By the way, the euro went to par yesterday, went to 1-on-1 with the dollar, so it has creeped up from 97 back to 1-on-1, but the euro is a sell, just to be absolutely clear. And also the dollar yen was at 145, 146. That's going to go to 150. It's only taken a little bit of a break, a bit of a respite in its ascent upwards. All right, that's it for now. This is Mayor Walensky with Driving Markets. Driving while talking about markets. I know you're going to be sick of that, but hopefully you get it through your heads. Spread it, subscribe, share it. Let's get some likes. Let's get some more viewers. Let's get people out there listening to Driving Markets. Have a good weekend. Shabbat Shalom. Speak to you soon. All the best.